Hi there, traders. This is Brad Gilmore with the FX Market Insight for the 8th of November. All right, so we're sort of halfway through the Asian session and just having a look at the major currency pairs after yesterday. Now, I should have highlighted probably at the start. I just brushed over it. But the volatility around elections and obviously the US midterms falling into the whole political spectrum, the results are staggered, right? So what you get is, it can lean one way, then it moves back the next. And what you get is a lot of volatility. So you see this on the major currency pairs, dollar Swiss, obviously the dollar was going a little bit nuts. It was pretty benign on the Aussie and Kiwi. The Kiwi had already had some strong data out, but it did drop it down about 30 points at one stage. So that volatility didn't really come into play too much on sterling, but all the other pairs, they were banging all over the place, So I know a few traders got caught out on that. My apologies for not really probably emphasising that enough. But let's just have a look what's going on. So US midterm elections and the upcoming Fed meeting today. So the midterm elections has the dollar on a pretty much neutral scope at this stage running into the Fed. So it's going to be very important. I think the Fed are just going to run with the same mantra. They are in a hiking mode, and it looks like December. They will hike again. But that's all sort of factored in. So what we've got is, now we've got a neutral euro and a neutral US dollar at the moment. So we've had a bit of a clean out on the top side on the euro, and it's now back trading sideways, almost exactly where it was. But sterling, the chances of a good deal for Brexit and strong UK fundamentals, both overriding that neutral US dollar at the moment. And to me, there's still plenty of top side on sterling to go. The Aussie, now I was just having a look through the RBA minutes. Now, the Aussie technically has broken higher on the hourly, daily and weekly charts. I read through the RBA statement again. It's actually quite hawkish. Everything's improving. The only thing they haven't said is that they're going to raise interest rates, right? That would be the key to it. But you actually read through the document, it's actually quite a hawkish. I've left there the central bank, the RBA sentiment is sort of neutral, but it's only just. It's more neutral to slightly hawkish. And that's put an upward bias on the Aussie. And once again, with the US dollar going into sort of like a neutral stance from being positive, it's like the Aussie dollar has got a real kick to the top side. And that's the same for the Kiwi. The Kiwi employment numbers yesterday, huge numbers. And with the US dollar just rolling over, that's given the Kiwi a big push to the top side as well. Dollar yen, well, to me, it's just jamming away sideways. I know it's got a bit of an upward bias at the moment with the current sort of move in equities, but it's not really doing a hell of a lot. Dollar Swiss tells the story. There was a few issues today with dollar Swiss on the roll. It is a US holiday on Monday, so just be aware of that. But the volatility on the dollar yesterday was felt by dollar Swiss. It was all over the place. I mean, it is basically back to where it was, but you can see how aggressive that was, and pretty much the same for dollar CAD. The Canadian dollar and the Swiss, both neutral at this stage. And so what's moving it around is the fluctuations in the dollar coming from those US midterms. Now they're back just trading sideways. The dollar index, well, it's starting to sort of roll over a bit. If you look at the longer term picture, it is still a bit sideways, but you can't deny it's got a net downward bias at the moment. Now, if I just bring you across to where all these movements are coming from, you'll start to see where that sort of, well, you won't see the neutral dollar picture, but you can see that even the media sort of outlets are sort of saying the dollar trades in a narrow range as investors wait Fed rate decision. Well, yeah, that's sort of true. I mean, the dollar has just lost its mojo pretty much from the ongoing drag on the US-China thing, but mainly from the US midterm elections. And then you've got the upcoming Fed meeting today. And everyone sort of just empties their pockets. Okay, they've locked out all the US dollars at this stage and just waiting to see where the direction comes from next for the US dollar. Is it the Fed tomorrow or later today, I should say, or what is it? So sterling, obviously, a Brexit deal is close, and that's why it's going up. Any change in that sentiment could send it down a couple of hundred points. But don't forget, underlying underneath that geopolitical situation are strong UK fundamentals. And that's pretty much it. The rest of the currencies are just jamming away sort of sideways. If I just, where's that MyFX trading hub? I just want to get you up. There's a bit of a change here in the sentiment on some of these pairs. And it really comes from that change in the sentiment of the US dollar. Now, if I just scroll down here on the MyFX trading hub, so obviously the two major things that were impacting yesterday, Brexit and US midterms, still, like the US dollar has sort of really stalled. Brexit positive for sterling, and that's at the same time pushes the US dollar down somewhat. But the US midterms has left the US dollar just flapping away, just looking for direction. And let me just come down here before I get back into the Fed. So if you look at the overall picture, okay, so the US dollar index, okay, to me, it's moved into a sideways sort of stance. On the daily and weekly charts, the longer term charts, it sort of it popped higher there about a week or so ago. And now it's just sort of slowly drifted back into the range. So to me, yeah, short term it's sort of drifting lower, but on the longer term charts, it's actually just trading sideways. And when that changes, you can see how it changes the complexion of the dollar pairs themselves. Okay, the yen, the Swiss, and the CAD at this stage, to me, fundamentally pretty neutral, as is the euro for that matter. Like, there's nothing happening in Europe, so that's sideways. But we do have strong fundamentals in the UK, and technically it's heading higher. To me, the Kiwi fundamentally and technically is looking to the top side. Aussie's got a very bullish stance, but it's more of a technical picture. As I said, the RBA statement from Tuesday it's got all the hallmarks of a hawkish statement, but there's just nothing to do with interest rates. So I'd like to see them give us some sort of timeline for interest rates. Then that would go hugely bullish. So with this in line, what you should be looking for is these pairs, these three pairs, have very clear direction, right? So to me, the focus should be on these pairs and actually looking for potential opportunities to get into those trades at the moment. Now, what are we looking at? Well, we're looking at the key data releases. And obviously, funnily enough, this is where the Fed, why it's so important, these meetings, because the US dollar impacts all currency pairs. And it's pretty much the only major release coming out today. So you need to be abreast of what's going on. There's no change of rates expected. I would expect Jerome Powell to come out with the same sort of mantra. We're on a path, potentially one more hike, etc., etc. Sort of pretty hawkish. But if that changes, and if the pressure from Trump or whoever else gets into play here, well, then that could really impact. Any change from that, the US dollar will be sold off pretty aggressively. Okay, and talking about the US dollar, so that's pretty much it. There's only one real thing you need to really be following, and that's the Fed meeting today. If I just bring you across to the dollar pay, I just want to give you a little bit of let me just move these things out of the way. Just look at the US dollar here in the data. So there are a couple of other data releases coming out now. This is the US dollar. So overall, the big picture, pretty much sideways, but short term down. Dollar one, no one's really cracking into this pair just at the moment. Obviously, those US midterms, they sort of say Trump is still on the path to raise tariffs, but we haven't really seen anything at this point. There are, and this is where you look at the other sort of variables. Equity markets, strong, so there's risk-on appetite. Aussie and Kiwi, those pairs, commodity-based currencies, are seen as big winners when the equity markets go up. That sort of further aided that move. Then you come back down to the overall economic numbers and just have a look through here. You've got some Swiss employment numbers, no big deal. We've got some trade balance figures, which are now out, slightly down for China, but exports down, imports up. That's not super cool. That's sort of pretty negative for the yuan. I'm surprised it hasn't moved a bit lower. So or dollar one up. So then we've got the housing starts in the Canada, some the initial weekly jobless numbers, but the real cage rattler, I should say, is the Fed, right? So this is where we are. No change in rates expected. So it really is going to come down to the statement, which is easy to pick off. You just have the old statement up and have a good look through that. That will sort of guide you through where the where the opportunities are. And what I'm talking about is if there's a change of their stance, well, then that's when things are going to get very interesting. All right, so with the sorry, I was just going to say with the main aspects. To me, where's the cash in the market at the moment? Well, it's to do with the pairs, as I said, that do have sort of clear sentiment, particularly the sterling and also the Kiwi, the little flightless bird. These two pairs more fundamentally and technically going higher. The Aussie, as I mentioned, more of a technical trade, but it is going higher as well. So when you look at the Fed and the US dollar, this is how important it is. If the Fed gives the US dollar sort of, comes out further hawkish or more hawkish or whatever it is, or dovish, that's when we'll get the clear direction for the US dollar. It may not be apparent straight away. It may happen about 2 hours after the release. That's what usually happens. So the Fed usually release their statement. The market sort of chews the fat, just waits and has a look at it, thinks about it, and then they trade, right? It's more like the bigger hedge funds and these sorts of things. They don't generally just run in on the release and start buying or selling. They consider what's going on. Is it a change of policy or is it the same, etc.? And that's what they do. But the Fed meeting could potentially give all these pairs clear direction and could either give these currencies here a boost or have them spinning backwards. So make sure you keep an eye on that. But the general bias is pretty clear to me at the moment. If you're looking at the overall technical aspect, you can see here just where the opportunities are and which currencies are churning higher. If I just bring you over to the technical side of things and look at the daily charts, this is always a good way to sort of clear the air. So you can see sterling, it is trading sideways. It has broken through that resistance line up around 131, but still we've got a couple of highs here around 133. Euro just doesn't want to go on with it. And we're starting to see the Aussie and Kiwi, which have just been pushed down right over the last number of months on the back of just a strong dollar and also a weakening yuan. Okay, that's sort of come into play. It's sort of lost that bit of mojo at the moment. Dollar Swiss was that dollar bullish move in the dollar did have a go high. It's now stalled and just trading sideways. Dollar yen, I mean, yeah, sure, long-term picture, it is sort of slowly going up. But if you have a look over the last quarter, it's just been trading sideways, as has dollar CAD in a big range, and here's the dollar index on a big picture. So you can see here it is still going higher, or has gone higher. It's still in a bit of an uptrend, but it is rolling over back on itself at the moment. And that's where the Fed comes into play. So it's going to be pretty interesting to see how this one plays out. It's the only major release. As I said, there's a few other things coming out, but, it's the main game. So that's what you want to be focusing on. And when you're looking at the trading opportunities, as I said, focus on the pairs that have sort of clear direction. They may change after the Fed, but we'll have to wait and see. At this point in time, I would expect sterling, Aussie and Kiwi to continue to the top side from now as well. And that's pretty much it, guys. There's plenty going on. This is actually the business end of the week. So don't. Hopefully, you haven't sort of spent all your shekels yet. You've got something in the tin, because we've got plenty of good things coming out tomorrow. Especially, we'll be focusing on especially the Aussie, but the yuan will come into play with the CPI numbers. And then we've got some UK GDP and manufacturing output for the UK. And then there's also the US PPI numbers there as well. So plenty to trade for. Tune up your charts, have a look, get your action in there. If you've got a discussion, jump in the live trade zone and we'll see what we can work out. All right, guys, have a good trade day. We'll see you in the trade zone. Cheerio.